The United States and China are locked into an intense battle for the future of our world. And no, I'm not talking about a military conflict. Right now, there is a race for the future of energy. And in today's video, we're going to look at how in just a few short years, China has been able to leapfrog the United States in innovation, manufacturing, and technology, and now holds the future of energy in the palm of their hands. Now, you might be skeptical and think I'm exaggerating, but new reports are being published every day in Western media admitting the truth about China's rise. Just take a look at this groundbreaking article from The Telegraph, where author David Blackman admits without question that China is winning in every imaginable way. The article states, whether you're talking about EVs, wind, solar, electric power generation, manufacturing, minerals processing, or control of supply chains, for pretty much everything, China is indeed winning the race. What's most fascinating about this power race between the US and China is that if we rewind the clocks and look at these industries just a few years ago, the US had an incredible lead over China. So what happened? How could the US lose its position of strength? But more importantly, how could China rise so quickly? Let's examine the solar industry and find out. American scientists first invented solar panels back in 1954, and for the next 7 decades, the United States enjoyed complete control of the solar industry. This chart from Bloomberg is fascinating. It shows as recently as 2008, the US manufactured 43% of solar cells, while Germany and Japan manufactured 22 and 18% respectively. But fast forward to 2024, and the US accounts for less than 1%. Japan has completely given up and manufactures absolutely nothing today, and China controls over 95% of the polysilicon production. The US solar industry is now at a point where it can never recover. Of course, US politicians will blame this collapse of the US solar industry on the Chinese government and say that Beijing is using unfair trade practices. But don't believe it for a second. China's edge has not been driven by state-owned manufacturers, subsidized loans, tariffs on imports, or IP theft. Instead, it's come from private businesses convinced of a bright future, investing aggressively and luring global talent to a booming industry, the exact entrepreneurial mix that made the US an industrial powerhouse. That's a powerful quote, and came directly from David Flicking, who wrote a groundbreaking article for Bloomberg last month entitled How the US Lost the Solar Power Race to China. Solar energy is projected to become the world's biggest source of electricity by 2031, and people don't realize just how immensely transformational this development by China is. According to a new report from the International Energy Agency, renewables will meet about half of global electricity demand by 2030. China alone is set to account for almost 60% of all renewable capacity installed worldwide between now and 2030, more than the rest of the world combined. But like I mentioned at the start of today's video, the US and China are locked into an intense battle for the future of tech, and nowhere is this more apparent than the microchip industry. Make no mistake, the US is a microchip powerhouse. You simply need to look at the performance of NVIDIA, the best US semiconductor company, the past 5 years to see how valuable this company and industry are for the future of our world. But once again, we are watching a strong China emerge in an industry the US government desperately wants to control, even if it means destroying some of America's closest allies. Dutch semiconductor equipment maker ASML lost $53 billion in value in a single day due to the US export restrictions on China. This is a remarkable story, and I challenge anyone to ask a Dutch person how they feel about seeing ASML, which is not only the biggest Dutch company, but also one of the top 3 biggest companies in all of Europe, being controlled so ruthlessly by the US government. 49% of ASML sales come from China, but the Netherlands is facing intense pressure from the US government to stop exporting to China. Of course, the US will tell the Dutch it's in the interest of national security, but this entire saga shows you the reality of the situation. There is very little sovereignty in Europe. The EU will align with the US government's interests, even if it wrecks their own economy. Honestly, it's the only card the US government has left to play. Sanction and restrict China in hopes the US can maintain its lead in semiconductor technology. But a new report titled The Double-Edged Sword of Semiconductor Export Controls reveals why this strategy will ultimately backfire. It argues that while the US implements these strict controls to stop China's access to advanced semiconductors, China is responding with impressive progress. By embracing innovative strategies, China is not just mitigating the impact of sanctions, but potentially reshaping the global semiconductor landscape. Just last week, it was reported that Xiaomi, one of China's leading tech brands, started the production process of 3-nanometer processors. This comes 1 week after China's largest and most important important tech company, Huawei, announced a new patent for 3-nanometer technology. This article states the reality of the situation. China continues to move forward despite US sanctions. One of China's biggest advantages is that when a certain industry is given the green light from the government, that industry is almost certain to prosper as new companies, entrepreneurs, and resources come together in China's whole nation approach. There is no greater example of this than looking at China's EV industry. This chart highlights the number of sales from GM, Volkswagen, and Nissan, 3 of the most popular foreign auto brands in China. As recently as 2019, VW enjoyed a lucrative position in the Chinese market, selling over 4 million cars that single year. But fast forward to today, and sales for all foreign auto brands in China are falling off a cliff. This phenomenal trend was highlighted by Michael Dunn, a leading auto expert who predicts most of the world's biggest car companies will depart the Chinese market within the next 5 years. If you need proof to how advanced Chinese cars are, I want you to listen to the words of Ford CEO Jim Farley.
I don't like talking about the competition so much, but I drive the Xiaomi. We flew one from Shanghai to Chicago, and I've been driving it for 6 months now, and I don't want to give it up.
This video is truly phenomenal. I mean, can you believe the CEO of Ford has been driving around a Chinese EV in the United States for the last 6 months? What a testimony to the quality of Chinese products, but also a worrying sign for the US. This article from Business Insider says we're losing the one thing that keeps the peace between the US and China, and that is American companies selling its products to the lucrative Chinese consumer market. For years, companies like Nike, Starbucks, and Apple were the most popular brands in China. But as with cars, China's strategy is shifting from made in China, being the world's factory for foreign brands, to designed by China, where they've moved up the value chain and are the brands. Apple, the most dominant player in the Chinese smartphone market for years, has now fallen outside of China's top 5 smartphone brands, with all top 5 positions occupied by Chinese brands. Now, don't get me wrong, Apple still has plenty of potential in China. Their stores are literally spread all over the country. But all of these emerging trends play into a much larger story, which can be seen in this public opinion poll from one of China's top universities about the Chinese outlook on international security. An incredible 87.6% of Chinese citizens agree with the statement that the US is trying to contain China's development. This shows how current US policy towards China are antagonizing the Chinese population. How does this affect the future of China? Well, quite a lot actually. When Chinese people were asked if domestic affairs should take precedence over foreign policy and international affairs, over 64% of Chinese people responded yes. Ultimately, if the US government is going to sanction, pass tariffs, and block the rise of China, then China has no other option but to turn inwardly and develop their domestic market. In an ideal world, the US and China would work together, because China is literally inventing the future of our world. Just last month, China completed the world's first fully unmanned paving construction project. Controlled by advanced drones, China paved 157 kilometers of highway without a single worker operating a machine. If you remember one fact from today's video, let it be this. China exports to the US are less than 3% of GDP. If the US vanished from the earth, China would lose only a fraction of its technological capabilities. In the past 20 years, we've seen a dramatic shift from China as it has now mastered almost all critical technologies. Innovation in areas such as EVs, batteries, solar, semiconductors, AI, smartphones, robotics are driven, once again, by China's domestic market. But there is one final energy sector I want to discuss with you because I feel it's one of the most important for the future of our world. It's nuclear energy. And once again, we see China holding an incredible lead for the future of this critical technology. Earlier this summer, Bloomberg announced China's plans to invest $31 billion in a massive nuclear push that will see China surpass both France and the US as the world's leading atomic power generator by 2030. Make no mistake, the future of energy is nuclear power, and the United States is going to have to invest significantly in this industry in order to keep up. And now I want to shift to the investing portion of today's video and tell you about an opportunity in the market that plays right into this intense power battle between the US and China and the future of energy. Today's video sponsor is Uranium Royalty Corporation, which trades on NASDAQ under the symbol UROY. This is a fascinating company, as it's the first and only company to apply the successful royalty and streaming business exclusively to the uranium sector. I'll break down exactly what that means in a second, but first, I want to explain a little bit more about the nuclear energy sector and why there is a massive demand for the future. Just take a look at Europe, which has no less than 130 nuclear reactors in operation amongst 14 member states. Nuclear energy is an asset in the EU and is seen as an environmentally sustainable investment. But when we look at the US nuclear industry, there is a massive production gap. 2024 demand is estimated to be 192 million pounds of uranium, but the US production is limited to only 157 million pounds, leaving a gap of 35 million pounds. Because of this shortage of domestic uranium, the US actually sources most of its uranium from Kazakhstan and Russia. In fact, the New York Times just ran a major story about this 2 weeks ago in a groundbreaking article entitled "US Ramps Up Hunt for Uranium to End Reliance on Russia." The article highlights exactly what is going on in the industry. Nuclear power is coming back into vogue in the United States as politicians and investors embrace the technology as a way to meet growing energy demand without releasing the gases responsible for climate change. So what makes Uranium Royalty Corporation special, and why is it an interesting player in the uranium industry? First off, the company has a first mover advantage as it uses royalties and streams to profit off uranium mines around the world. Royalties are a payment to the royalty holder by a property owner. In this case, Uranium Royalty Corporation buys royalties directly from uranium miners and makes a profit when those miners produce new uranium. Streams are essentially like options, where in exchange for an upfront deposit, the holder, which in this case is Uranium Royalty Corporation, can purchase all or a portion of the metals produced from a mine at a preset price. This is an extremely unique business model, which allows the company to purchase royalties and streams around the world. Currently, Uranium Royalty Corporation's portfolio includes interests on 19 developments, advanced, permitted, and producing uranium projects in multiple jurisdictions throughout Canada, the United States, Spain, and Africa, giving the company a global diversified asset portfolio. The other thing I like about Uranium Royalty Corporation is this business model gives you valuable exposure to the uranium industry, but reduces your risk in other areas. For example, with this royalty company, you have fixed operating costs, no development capital costs, exploration and expansion upside without the associated costs, a much more diversified portfolio, and the ability to grow without increased management. The stock is currently up 36% the past month at the time of this recording and is in a strong financial position with over 304 million Canadian dollars in liquid assets and a strong balance sheet, allowing the company to expand and acquire more royalties and streams in the future. Finally, I always like to see who is leading the team, and Uranium Royalty Corporation is led by Mr. Scott Melby, one of the most respected veterans in the uranium industry. He brings in over 40 years of experience, having worked for some of the biggest names in the uranium industry, including Cameco, Uranium One, and Uranium Participation Corp. As always, I want you to do your own research before making any investments, and to help you with this, I'm going to link the company website, stock ticker, and most importantly, the investor presentation down in the description below. The investor presentation is an extensive document showing you precise details of all the mines that Uranium Royalty Corporation is currently investing in around the world. As always, thank you for spending time with me here today on YouTube, and I look forward to seeing you all in our next episode soon.